In the energy markets, we're going to take a look at natural gas today. Natural gas has been in a downtrend, seven consecutive lower closes for natural gas when you look at that March future. Today being an exception, we're seeing gas bounce a little bit. Natural gas actually up about 2%, a little over 2%, right around the 607 level. So we're seeing this downtrend, at least for the short term, being disrupted slightly. But when you look at what's going on in this space, certainly you have to look at production. And one thing I want to focus on here is the fact that when you see these shale drillers continue to add rigs, and we did get the Baker Hughes rig count, it increased by 7 this week, that byproduct of those shale drillers is natural gas. And if we continue to see more shale drilling coming online, that increases the production of natural gas, that increases the supply, obviously. And that's another factor, I think, that's playing into the dynamics here when you see, even though inventories are, from a historical standpoint, at lower levels, we still see production ramping up, and particularly when you see the shale producers coming back online and then increasing the natural gas production as well. Secondly, I want to point out today is the futures contract. Let's look at the futures contract. March is the lead future right now, and you're seeing most of the activity there, but we are starting to see the rolling of positions, the rolling of activity from the March future to the April future, and that will take place over the next week and a half to 2 weeks. When you look at March future, it expires on February 26th. So I can tell you, when you look at the dynamics here, we did see a big spike yesterday in volume in both the March and April future. But as we roll towards expiration in the end of February for that March future, I expect you're going to continue to see the rolling and the increasing volume being pushed into the April future now that it's becoming the lead month.